All right, well, welcome everyone to tonight's webinar. My name is Tyler Ballhorn. I'm the founder of Stockscores, and I've been a stock trader for about 30 years, a little over 30 years, and I've been teaching people how to trade the stock market for a little over 20. What I'm going to do tonight is talk about my tools, my strategies, all kinds of great stuff, and I think you'll find it very educational and quite valuable. So here's what I want to achieve tonight. I'm going to show you my 6-day and swing trading strategies. So we'll walk through each one of those and give you a breakdown of their characteristics. Throughout the evening, I will show you examples of recent trades. I'm going to show you trade performance, not only some trades from today, but also from the past week, and then I'll show you some data that I've been collecting on one of my swing trading strategies, which is probably the most exciting strategy I have right now. It's performing amazingly well. Despite the market trending down, it actually still works, and that's always a good sign. So I'll show you some data on that. I've developed my own tools, and I will show you those a little bit and how they provide me an edge in the market. In order to do well, in order to beat the market, you have to have an edge. I'll talk a little bit about the services that I offer to help you profit in the stock market, whether you want to trade full-time, part-time. These tools and services support from me. They will speed up your learning process and really reduce your cost in terms of not, suffering through losses unnecessarily. And then at the very end of the presentation, I'm going to walk you through some trades, and we'll talk about how one of those trades could have made $1,000 today easily, certainly a lot more, but I'll show you the risk-reward trade-off for that trade and how much capital you would have to put up to make $1,000 on that. And then I'll show you a swing trade, which has done quite well over the past 4 days, and we'll work through the same thing. What kind of money would you have to put into that trade to make $2,000 over that 4-day trade? It was exited today. It came up 3 days ago. This was the 4th day. So I'll walk you through that as well. All right, so lots to do. But before we get into the actual trades and things like that, I need to teach you a few things so that you can understand some of my terminology. And so this base knowledge is pretty important because I'm going to explain, where you buy, where you sell, how you measure performance, how you know when to take a loss or when to sell a winner. And in order to do that, we have to have some basic terminology understood. So the first thing I want to talk about is just the difference between day and swing trading and what is day and swing trading. So day trading is very simply holding a stock for just a day, and swing trading is holding a stock for a few days. So here is a stock that we'll talk more about later tonight. But this was the first trade on this stock today. It occurred just after 11:30, and the exit on this first trade was right in here. And again, we'll go through the economics of this, but in this case, you're buying it around 11:30 and you're selling 12:45. So that would be a fairly quick day trade. And this trade, for every $100 of risk, made you a little over $300. And again, at the end of the presentation, I'm going to go specifically into the math of how you size these positions, how many shares you would buy, that sort of thing. And this particular stock gave an even better signal later in the day, and I'll show that as well. All right, so that's day trading. And what's important to note is that you're out of this trade before the market closes. Now that differs from swing trading because with swing trading, we're holding for multiple days. So in this case, we had a buy signal on October 3rd on GRTS, and you can see it moved up quite well. Just as a little breakdown of what you're looking at here, each one of these lines represents a day. So here's today, here's yesterday, here's 2 days ago, and so on. So this was October 3rd. This little bar here, we call that a candlestick. That represents 13 minutes of price movement for that stock. So from 9:30 till 9:43 on October 3rd, the stock moved up quite a bit. You can see sort of the price move. It started here and finished up here. And that was our signal to buy. And I'll explain why later. For now, I'm just going to sort of give you a sense of what a swing trade is. And so in this case, we had the sell signal on this one right around in here. And so that's what, 5 days? So 1 day, 2 day, 3, 4, 5. So today is the 6th day. Actually, it was yesterday. Yesterday was the 6th day, and we had an exit signal there. And so that would be a good swing trade. It earned a nice profit, and it also played out over a few days. It was quite orderly. Swing trading takes less time. You don't have to sit in front of your computer all day. In fact, most of the entry signals, just like this one, come in the first hour. In fact, most come in the first half an hour. But if you can sit there for the first hour, then you can find stuff like this. And then after that, I sort of recommend you monitor your holdings. You can do that from a cell phone, using some technology where you can dial into your home computer just to watch your positions. That's something that I like to do. So, enter positions, and I might go to the coffee shop or take my kids to school or what have you, and I monitor from my phone, or sometimes I'll bring my iPad if I want a little bit bigger screen, of course, and just sort of keep an eye on things. So that would be swing trading. Now, day trading is more time intensive. You need to sort of be there while the trades are open because the entries and the exits are quicker. They're more time sensitive. And so if you're more leaning towards being a full-time trader, or perhaps a full-time trader but just on certain days, then day trading works for you. And I have a lot of students who will day trade 2 or 3 days a week, and they're there kind of all day. And then maybe other days they swing trade. And then I have lots of people who just swing trade because they don't want to sit in front of their screen all day. So there's lots of different things. And again, I'm going to go through specific strategies today for each of those. Now, the next thing I want to talk about is a little bit of the story of how I came to figure some of these things out. So I call this how I reverse engineered the stock market. So many years ago, 25 years ago, let's say, I had been trading the stock market for a few years, and I was doing okay, but it was kind of hit and miss. I was a student in university in finance, and I'd buy stock on tips. I knew lots of people that also traded the stock market, and we would share ideas, and I was kind of just doing what most people do, I guess, just trading on ideas that I picked up here and there, but I really didn't have a very good approach. And then one day I thought to myself, well, I know that there's some of these stocks that I buy that do really well, and then there's others that don't. And so maybe what I should do is work backwards and look at the stocks that did really well and try to figure out what those stocks had that the losers did not have. Or if I looked at all the winners, what were the characteristics of the winners? And so I set out on a really big study where I looked at hundreds, maybe even thousands of stocks that had done really well over a couple of years, I guess. And I printed out all their charts. I had filled binders with these charts. I put data into spreadsheets. I just collected a ton of data. And by the way, I still do that today. My methods today are much more efficient. It doesn't take me as much time. But back then, I spent countless hours looking at all the winners. And by doing that, I started to realize that there were certain things that were common among the winners. Now, they didn't all do it. Not every winner showed the same characteristics. And some losers showed those characteristics as well. But what I found is that if I looked for certain things, and I'll talk about those things in a moment, that I was consistently able to find these stocks that were likely to make big moves. And so I just worked backwards, and I call that reverse engineering the stock market. Now, the most important thing that I found was that stocks that did really well, stocks that made big gains in a short amount of time, they all kind of started the same way. They started with this surprise of abnormal trading activity. And by that I mean abnormal price gain, so they would go up a lot in price all of a sudden, and they would do so on very heavy volume, abnormal volume. And this was sort of consistent with something I had learned in university when I was studying mergers and acquisitions that were happening in the 80s, where one company would buy another. And we would see when we studied these mergers and acquisitions that a lot of them had abnormal trading activity before the big deal was announced. And so if company A said we're going to buy company B for $20 a share, and company B had been trading at $10 a share, then of course the stock would go from $10 to $20 basically overnight. But what was really interesting is how many of those deals started to move before the news came out. In other words, there were some people that had that information early and they used it to their advantage, but in doing so, they created abnormal trading activity. All right, so on one hand, I have this experience in university, my 4th year of finance, where I took this class and we did this study. And it really showed that the stock market isn't fair, that some people have better information. But it also showed that abnormal trading activity tended to predict strong price moves. Okay, so I had that on one hand. On the other hand, I was trading with this idea. I was trading mostly penny stocks because I was a student. I didn't have a lot of money. So I was trading cheaper stocks, mostly Canadian stocks on the Canadian venture stock markets like the Vancouver Stock Exchange, the Alberta Stock Exchange. So I was doing this trading and I had quite a following. I was quite young. I was in university, but I was part of this club and I would talk about my ideas about trading the stock market and share them with others. And I had a few hundred people that were sort of following my picks. So one day I get a call from the securities regulators. And they had sort of heard what I was doing and they called me into their offices. Now, I must say that shocked me and scared me. I wasn't trading on inside information, but they could see that I was doing pretty well in the market and they were hearing about, this following I had. So anyway, I had to go down to the regulators of the Alberta Stock Exchange, which was in the city I lived in Calgary, Canada. So I went down there and I met with the head of surveillance, a guy named Tim Daly. And he said, well, we just want to check up. You seem to be really good at picking these stocks that make big moves on news later. Could be that you're trading on inside information. And I said, well, no, I don't know anything. I just follow market activity. I look for stocks that are behaving abnormally, abnormal price, abnormal volume, as basically evidence that something's going on. And he kind of had this wry smile. He says, yeah, that's exactly what we do to find insider traders. We look for abnormal trading activity. So I've got this thing I was doing in school. I've been reverse engineering the stock market. And now I've had the head of surveillance for the Alberta Stock Exchange tell me that that's essentially how they find insider trading. So what it comes down to then is that the most important factor that I believe for picking hot stocks is abnormal trading activity. So if you look at your screen here, you'll see a stock that was very hot today. We're going to talk more about this one later on, but it was very abnormal today, but it actually started on October 5th. See how these lines spike up right here and how there's a little yellow dot right there? So that's my own indicator. It's called an action candle indicator, and it measures abnormal price and abnormal volume. And in that particular 13-minute interval, we see this abnormal price and abnormal volume spike, which ultimately, 4 days later, results in the stock making a big move. Okay, but it all started with the abnormal activity there. So the market gave us a clue that something was going on October 5th. Before that, the stock was pretty boring and quiet. And then it really started to move here. Okay, and we're going to elaborate on these things. I'm just laying down some ideas as we go through, and then we'll get into more. Someone asked me if they should be seeing my face talking. For the webinar, no. For the video version that I put up on YouTube, yes, you will have to look at my face. All right, so the next thing I want to talk about is the most important factor for successful trading. And that differs from picking hot stocks. So if you want to pick hot stocks, stocks that have the ability to make some big price gains, you want to focus on abnormal activity, because most stocks that make big gains start with abnormal activity. That's what I learned from reverse engineering the stock market. But that actually is not the most important thing for being successful as a trader. And this might surprise you, but the most important thing for being successful as a trader is being able to take a loss when the market tells you to be a good loser. And that's very hard. Most people can't do that because most people are normal and they don't like to take losses. So here is an entry signal on the day trade on this particular stock today. And where you see this red line is where I would put my stop loss order. So if I'm buying the stock at the blue line, I'm going to plan to lose by selling at the red line. Now in this case, I didn't have to. The trade worked fairly well. And again, I'm going to elaborate on this trade later because it had a huge run in the afternoon, and I'll show you that one as well at the end of the presentation. But if you don't do that, if you don't take losses when the market proves you wrong, a couple things will happen. Number one, your small loss will probably turn into a big loss. So that means you just end up losing more than you should. Number two, your emotional capital is going to be used up. So on one hand, we're using up our financial capital, and on the other hand, we are being harmed emotionally because nobody likes to hang on to a loser. And then the third thing is you're tying up your money in a loser. Instead of having that money working in a good trade, you're sitting there in a parking lot that's taking you down, and not only down financially, but down emotionally. So that's two important lessons that I want everyone to remember from tonight's presentation. Number one, the best trades are the ones that show abnormal activity. And number two, to be a good trader, you have to have the discipline to take a loss when you're wrong. If you can't do that, you probably shouldn't trade until you get that emotional control. All right, now here's another example. Entry here, and there were some entries here as well, but we're going to talk about those later. And support here, and we always put our stop loss a little bit below support. So I talked about this on Saturday's webinar. We plan to lose if the stock goes below our last inflection point low. Inflection point is where price stops going down and starts going up. So in this case, the stock had been sort of going down there. It stopped going down right here, and then started to go up. So that was our stop loss point. And you can see that over the next 1, 2, 3, 4 days, we never went below that floor. And therefore, there was no reason to sell it. Even though the trade wasn't working real well yet, it was still a valid hold. And then today, you got rewarded for being patient. Okay, so what is my approach? Before we get into the actual strategies, let me give you a broad sense of my approach to trading. I am an algorithmic trader. I trade based on rules, strategy-based trading. Okay, I don't want to have a lot of human judgment. I don't want to have emotion. I want to make trading decisions based on rules. And so I built algorithms that the computer can process to identify good opportunities. Now these algorithms were, at least 5 years in development, really 30 years of experience have gone into these algorithms. And it's not something you'll get from other platforms. So I went out and I built my own tools. After I had reverse engineered the stock market and after I'd been trading those ideas for a while, I realized that I was spending a ton of time to identify opportunities, and sometimes I was missing them because I wasn't efficient enough. And so I looked at all the different software out there for trading the stock market, and there was none that had the tools that I needed. And so I built my own. I built Stockscores.com, which is a tool for investors. We're going to talk more about that on the webinar tomorrow, Thursday's webinar. And then I built specialized tools for intraday trading, day trading, and swing trading using a program called TradeStation, and I'll show you those tools in a minute. And also show you those tools more on Saturday. All right. So one of the tools that I've created for active trading is this screen right here. Now I get that this is pretty overwhelming. There's all these numbers on here and all these little windows. But I have this running in real time every trading day with automated processes to identify the stocks that are behaving abnormally and even the entry points right down to the minute. So for example, that stock we've been talking about so far, MTNB, is right there. And it gave its first entry signal at 11:32. And by the end of the day, that trade was up 17.7 times its risk, which means for every $100 of risk, it was up about $1,700. All right, so that's obviously great. I'm going to elaborate on this screen a little bit more. I just want to give you a sense of the tool that I built. Okay, and this is called our Active Live screen. So my members of Stockscores, my active trader members, can subscribe to this service where during the day they watch this screen, and I give an introduction at the start of the day. I highlight some trades at the start of the day. I do a wrap up at the end of the day as well. And it's all about guidance and giving you the power of these algorithms with the computer doing most of the work. The computer does 80 to 90% of the work, and then we just have to assess these signals as they come up. Not every signal is a good one. We have some rules that we check. So that's why I say it's about 80 to 90% automated, but then you still have to inspect them to see if they have the right pattern set up, and that's one of the things I teach. Now I do all that from my trading desk. So this is my workstation, I guess. There's actually two computers running all of these screens. And the screen that you were just looking at, this screen right here, is this one right there. Okay. So during the trading day, I'm watching that, but my active trader members are also watching the same screen because I stream that to them via webinar. So in real time, they can watch that screen. I'm watching that screen for entry signals. And then I'm also watching individual stocks on my watch list on these side screens. So these are the stocks I was watching today. And then in the middle, I'm watching, or I can call up any particular stock and do some analysis on it. And I also have some swing alerts that are happening here. So I got a lot going on. And it may seem overwhelming, but it's actually pretty simple. And by the way, I don't need all of these things. When I travel, I do all of this on my laptop. But it's nice to have 43-inch 4K monitors in front of me, plus the smaller ones, because it just makes me more efficient. All right, so here is a stock that we found today, and I'm going to go into the economics of this trade earlier or later, but the first entry signal was at 11:32, which was right there, and you can see how much that stock climbed. There's actually two trades on this stock. I would have sold, the sell signal was there, and then there was another buy signal there. We'll go into that in a little bit at the end of the presentation, and I'll walk you through the math of it, how many shares you would buy, that sort of thing. All right, so now let's get into strategies. So we're going to talk about my 6 active trading strategies today. The day trader, the IPV, superheroes, hit and run, alpha, echo, and simple swing. Again, the goal with these strategies is to minimize human judgment. We're just trying to make it as mechanical as possible. We do a little pre-market assessment, like 3 minutes before the market opens. I always look at what the direction of the market is, the trend of the market, because it will determine which strategies we focus on. The day trader strategy is better when the market's moving up or even sideways. IPB, you can do it anytime. Superheroes, you can do it anytime, but it tends to be in a better market. Alpha Echo has been working great even when the market's been going down. This is a buy strategy that's been working really well since August, September, October. I've been collecting data on it. I'll show you some of that later on, but it's hard to believe actually how well it's worked lately. Okay, so let's talk about the day trader strategy. So this strategy looks for entries on the 2-minute interval. Okay, so when we look at a stock chart, we can have a 1-minute chart, a 2-minute chart, a daily chart. I'm going to show you this in a minute. So we're looking for a buy signal that comes up where there is an action candle breaking out of a pattern. And an action candle is one of those little bars I showed you earlier that has the little yellow dot on it. And that's basically a situation where there's abnormal price and abnormal volume. So again, these work in a market that's sort of flat or in an uptrend. We typically will exit these before the end of the day. Most of the good buy signals come in the first 90 minutes. So it's a day trading strategy that works for people that don't want to sit in front of their screen all day. And it utilizes the day trader finder in the active live screen. So this is the active live screen. And our day trader finder is this window right here. Okay, so these are all of the day trades that this thing found today. So the top performing one was TPST, and someone asked me about that before I started tonight's presentation. TPST triggered at 120 with an action candle, and it finished the day up 18.4 times risk. Now, PHIO is another one that we found today. This one was earlier at 934. We actually entered it using a different strategy, which I'll talk about in a moment. So anyway, this is the performance of the trade in reward for risk terms. Now, you might not understand yet what reward for risk is. I will show you that in a short while. So this screen is updating in real time. And so when there's a new signal, it will trigger that signal on this screen, and you can, if you're watching that, you get an audible alert, and then you look at the screen and say, okay, PHIO is triggering, and you go take a look at the chart on your side, look for the things I teach you to look for, and then you would buy it or pass on it. All right, so that's the day trader process. Now, the day trader strategy, again, is one that works better when the market is trending up. I haven't been doing it a ton lately because it's been a downward trending market. So the day trader strategy is I think there's just better things to do in this market. But in this particular stock, HUBC, which was a stock that met like 4 of these strategies in one day. So that's why I'm using it as an example. October 9th was the day that it showed up. And so it triggered right at the open here for the day trader strategy. So that's the day trader strategy right at the open. We'll come back to this because it also triggered for some of the other strategies. So the next one I want to talk about is the superhero strategy. This was always my bread and butter strategy for many years. I did it almost exclusively. And then it stopped working around, say, maybe after the financial crisis in 2008. It's not that it didn't work, it just didn't give a ton of good signals anymore. And so I wasn't doing it for a long time. I was doing the day trader or the intraday pullbacks, but this strategy has started to work again since COVID, since we had the COVID market rally after the COVID crash in 2020. We had this great market rally 2020, 2021. And you had all these retail traders come back to the market, millions of them. And this strategy really is about emotion, about like taking advantage of emotion. And so it's worked well again because we have all these retail traders who tend to be emotion. It does tend to work better in an upward trending market, but it's been working okay lately. It's just doesn't have a ton of signals, maybe 1 or 2 a day. In this particular strategy, we buy during the day, we exit before the end of the day. It will give us signals usually after the opening hour. So it's not an early bird strategy, it's one more for the whole day. And it utilizes the IPB finder in active live or some of the indicators that I give my active trader students. So with this strategy, you're going to watch this window right here or this window right here. That's where you will get the signals for the superhero, as well as another strategy called intraday pullbacks, which I'll show you in a second. All right, so that's how you find them using that tool. You watch that screen. When a new alert comes up, you check the chart. There's a few things you have to look for. It takes 2 to 3 seconds maybe to assess whether it's valid or not, and then you would enter the trade. So on HUBC, it gave a superhero right here. So you see the little yellow dot there. That's the action candle indicator that I have created to find abnormal price and abnormal volume. And this stock broke out of an ascending triangle pattern. Those of you that are familiar with charts will know what that is. But essentially, it's an optimistic chart pattern because we have rising bottoms. We have a line of resistance here, which we got a breakout through. We have abnormal volume, which is why we're watching it. And the buy point was here. Stop loss point was there. And it went up nicely, sell signal right about there. Okay, so you buy, this was a cheap stock, buy at 50 cents, sell at 73 cents perhaps. So what is that, a 46% gain in a few hours? There's stocks that do this every day. Not a lot, usually less than 5, but this kind of thing can be found, all the time. Pardon me. All right, so next up, the Stockscores hit and run. This is a strategy for the opening half an hour. Very quick, in and out, usually within the opening 2 hours. You'll be out, but often even quicker. So it's a real fast trade for people who are pretty savvy at getting their trades filled quickly. Gives a few signals every day. It's not the most plentiful in terms of the number of signals, but on HNR, the way you find these is with this screen right here. This is the HNR screen. See there, that stands for hit and run. And so it'll just give a timestamp. There's a possibility of a hit and run on PHIO at 343. So you look at the chart, check it. It wasn't a good one at that time. There's very few at the end of the day that are valid. And so it's something where every minute or two, you have to look at a couple stocks to see if they're triggering. And you probably look at 20 or 30 before you find one. So it's, it doesn't yield a lot of trades, but the ones that it does yield tend to get you in early. So it's nice in that way. So on this HUBC, it gave the hit and run signal right there. So the way it works is you have an upward move, a pullback, and you buy the first break of the pullback with a strong candle. And again, you can see there my little pink dot, yellow dot. That's a message candle and an action candle, which are these indicators that I created for TradeStation, and I give them out to my students as well. And you can see, obviously had a nice run. Again, sell point would be about in here. Or you could be very aggressive and just sell it there. So buy here, sell there for a very quick, smaller profit type trade. Okay, so that's a hit and run. Alpha Echo. So this is my favorite strategy right now. This is my favorite strategy right now. It is a swing trading strategy. So it has entries on the 13-minute interval. It's effective in pretty much any market. I've been testing it for a while and trading it, and it's one of the few strategies that works really, a few buying strategies that works really well in the market that's moving lower. Now the exit can be like that same day, but usually it's a few days later. Most entry signals come early in the day, so it's one that's really good for people that don't want to sit in front of their screen all day. And it utilizes this window right here. So these are all the stocks that today gave a action candle on the 13-minute chart. And then we check each one of these symbols when they come up. So at 9:56, MUX triggered. So I would punch in MUX, check the chart. It actually didn't meet the rules, so I pass on it. And so you might get 100 signals, of which 15 are good. But it gives trades every day, and I'll show you the statistics on it in a little bit because it's really performing well. All right, so that is the Alpha Echo. Here was an Alpha Echo trade right here. So the way this strategy works is we want stocks that behave abnormally. Why? Because it tells us that there's a crowd on the stock. So when there's a crowd on the stock, we say, okay, great, something's happening there. And we wait for it to cool down. So this is the alpha day, and then it cools down, and this is the echo. This is when it comes alive again after being abnormal a few days before. There's a little bit more to it than that, but that's the basic idea. So when it comes alive again, our buy point is there. So you can see there's again a little pink and yellow dot there. There was actually a pink dot before, but the earlier one didn't break this pullback line, so it wasn't valid. It was valid at this bar right here. So our entry point was this line, and our stop loss was the red line. Okay, so in this case, we're buying at $7.24. Had lots of time to buy it. It didn't go anywhere for a few hours. And then later in the day, it started to go, and then over the next few days, it went up quite nicely. It actually gave a sell signal today when it broke down from a falling top. So that's one of the reasons we sell. When you break an upward trend line from a falling top, it's time to jump out. And so that earned about 4.5 times its risk. So what do I mean by that? Well, if our entry is here, we use this to size the position. So the difference between these two determines how many shares we buy. I'll repeat this again in a little bit. And that difference is called our risk. Or we call it minus 1R. And then each green line above is a multiple of that. Okay, so in this case, the stock maxed out at 7 times risk. And it gave a sell signal right there at about 5 times risk. But by the time you get out, it's about 4.5 times risk. So if you took $100 of risk, then you made $450. If you took $1,000 of risk, then you made $4,500. I'm rounding off. Of course, there'd be slippage and some commissions and that sort of thing, but that's it. And how much work would it be? Well, you'd have to be there for the opening hour to find it. And you'd check on your phone for a sell signal every 15 or 20 minutes. Just check to see if it's given a sell signal. If you sit in front of your screen, then you watch it, but otherwise, I usually just monitor it from my iPad if I'm away from my desk. Okay, so that's a swing trade on the Alpha Echo. Now, another swing trading strategy is called the simple swing. Very similar to the Alpha Echo, except that the difference is that it doesn't have abnormality in previous days. So it may have never been abnormal and then it just comes alive today. So these are, I would say, less profitable than Alpha Echo, but they're still profitable. Like, they still work well, but the amount of profit is a little less than the Alpha Echo. I'll do both, but I prioritize Alpha Echo. And then if I have the time to enter some of these simple swings, that I will. Sometimes it can be challenging to get all the orders filled, especially at 9:43. And when I say 9:43, I mean 9:43 Eastern time, because there can be sometimes 15 stocks to buy at 9:43. At 9:56, which is the next 13-minute interval, there's usually not more than 5. And then after that, there's maybe 1 or 2. And then throughout the rest of the day, you might have 3 or 4. So most of the signals come early. And so what happens if you're doing simple swings and Alpha Echoes, I like to prioritize the Alpha Echo so I can get into those as quickly as possible. And then if I still have the ability to get some other stocks, then I'll buy the simple swings as well. So here's an example of a simple swing. you can see it's boring, nothing going on, sideways trading, and then it comes alive with an action candle. It wasn't abnormal before, right? There's no abnormal volume beforehand, so that's the difference over the alpha echo. And you can see the abnormal volume coming in, so we know that something's going on. Buy point is here, stop loss is here, and it made a nice move. All right. Now, did I talk about the intraday pullback? I have a feeling I didn't have it here. I think I might have accidentally skipped that one, sorry. So I'll just talk about the IPBs because it's another good strategy. And there was an IPB signal in this stock. So an IPB stands for intraday pullback. So once a stock is abnormal, and once it's made a gain, we look for it to make a pullback, and then we look for a break of the pullback. All right, and you can see there's a little pink dot there. That is the Stockscores message candle indicator. And again, it's another algorithm that I've had created. And the computer watches for those for us. And when it sees one, it will make an alert on this screen, okay? Or on this screen. So, today MTNB made a IPB signal at 11:32. It made another one in the afternoon. I think it was the 1:33. So it actually makes multiples, and you can see all the different times are there. Again, all automated, no emotion. The computer does most of the work. Our job is simply to pull up charts as they trigger signals and check them. Okay, so got lots to go here still. Let's speed up a little bit. So what do you need to do this? Well, you need knowledge. So I need to teach you the core skills, the basics of the stock market. I don't assume for any of my students that they know anything about the stock market. I'll start with the basics. Many of you will already know the basics. All right, so then we're going to go on to analysis. How do you analyze charts? How do you analyze markets? How do you analyze the share structure, that sort of thing? That'll take me 2 or 3 hours to teach you that stuff. And I'll actually do an express class later in October. I'm going to do 2 1.5-hour classes where I will teach you everything you need to know to apply my strategies. I'm going to teach you how to manage risk. So how to know how big of a position to take, where to take a loss. Don't have this simple risk management technique that says, oh, if the stock goes down 10%, I'll sell. We don't do it like that because that isn't effective. Money management and how to develop strategies, the mechanics of trading, those are all things that I sort of give you as the background core knowledge. Now then you need the strategies. So I've given you an introduction to my strategies this evening, so you get the basic concept. They all seem to revolve around abnormal activity, right? In different ways. And I've been focused on trading abnormal activity for 25 years. And the concepts are still very similar to what I did 25 years ago, but it's now much more refined, uses technology much more. The power of computers really can give us an edge. And most people don't do stuff this way. Most people don't have the sophistication of these tools, and it gives us an edge in the market. These strategies are well tested. I'm going to show you in a minute how I test these. I've traded them for many, many years, and so I have a very good sense of how they work. And they don't, not every strategy, or sorry, not every signal works. It's very important to understand that. Losing is part of trading. So we're playing a numbers game. If I do 10 trades and I make money on 7, I'm happy. If I make money on 5, I can still make money overall because we take bigger profits than we have losses. Remember earlier I said one of the important things about trading is to not take big losses, to know when to lose. It's a big part of what I teach is to not take big losses. But that's not as simple as it sounds. You have to allow stocks to have some wiggle room before they, give a sell signal. If you have your stop set too tight, then you can really destroy your performance, actually. Even though you're taking smaller losses, you can really destroy your performance. So everything I do with strategies is based on data, the power of statistics. So here is one of my spreadsheets. And this is for the Alpha Echo strategy. And it, you can see here, these are all the valid signals from October 4th and 3rd. Here's the 3rd, here's the 4th. And not all of these were the ones that I like. You see here there how it says type. So type 3s are Alpha Echoes. Type 2s are simple swings. So those are our two best ones. All right. And this tracks the performance of those strategy signals. In order to test a strategy, you can't just say, well, I found these 3 today and that's what I'm going to put in my spreadsheet, because there's a big bias in that. In order to test a strategy, you have to build a database of every signal so that you don't have some bias in how you judge the data. So what I do at the end of every day is I import the data from my algorithm into Excel so that I can track the performance of every trade, and then we can set parameters to investigate the net profitability. So this is where I do that. This is an image of the analysis part of the spreadsheet. So these are the variables I can change in the strategy. So in this particular case, we're looking for stocks between $0 and $500, not requiring more than $200,000 of capital, but that's for $2,500 of risk. Most people don't trade with $2,500 of risk per trade, so it's a fairly high number. Anyway, this is all type 3. So here you can see the data for October. Okay, so on October 2nd, there was 4 trades. They earned a total at the close slippage or net RR, net reward for risk, of 14.7. So what does that mean? If you are risking $100 per trade, that means that your profit at the end of the day would be $14.71. If you're risking $2,500 per trade, that's your profit. Okay, I've got the spreadsheet set up with $2,500 of risk. And the capital required to take $2,500 of risk was quite a lot, $126,000. And that represented a 29% return for those trades. So obviously very awesome results. Now, again, most people aren't going to trade with $2,500 risk tolerance. Usually my students are in around the $100, $200, $300 risk tolerance, which means your capital required will be much less. For $100 of risk, it's going to be 1/25th of this. So like $10,000. No, not even $5,000. Okay. Yeah, $5,000 earning $14.71. So you can continue down the list here. October 6th, there was 10 valid signals. I don't have today's data in here, but today was, I think, 4 valid signals on this particular strategy, which is our type 3 Alpha Echo. All right. Now, you can see the results are amazingly good. And I've been calling out these trades for the last month or so. My members of Active Live are trading them and doing well with it. I can't guarantee it's going to continue to work like this because honestly, the results are too good to believe, but I'm calling these out in real time. They're not like, woulda, coulda, shoulda later in the day. These are ones that I highlight. And the way it works is in that opening half an hour, I go through all of those 13-minute action candles and I'll say something like TUP type 3, TUP type 3. I'll usually repeat it twice. And then MRTX type 2, ICU type 3. I'm just calling them out that way. There's so much going on and I'm so busy because I'm trying to, pick the stocks, make the trades. It's a lot. So I'm very, how you would say, efficient in how I call those things out. Okay, but that's the numbers on the Alpha Echo for the month of October so far. So what do you need? Tools. If you're going to be an investor, you're going to use the market scanning tools on Stockscores. I'll talk more about those tomorrow in the Thursday webinar. If you're going to day and swing trade, TradeStation is a great choice, and I have indicators for TradeStation. There's other real-time charting programs that you can use. A lot of my students use TradingView, TC2000. They're good, but they're not as good as TradeStation. You need tools for order entry, so you have to have a broker. Who to buy with? I use interactive brokers. I'm not in, partnership or anything with them, but that's who I use. People always ask me who I use. You need a way to analyze your trades afterward. So I use Excel. You can create sort of a trading journal in Word. And then the most important tool for us is this Active Trader Live, which is that screen that I've been showing you. Okay. Process, step-by-step plan for implementing the trading strategy. I give you that. It's mechanical, it's very efficient, just tries to take the emotion out of it. We start by looking at the market overall to determine the market factor. Is it helping us or is it hindering us? And that will determine what strategies we apply. And then we look for the action candles. When we see one, we assess the stock to see if it satisfies the other rules. Then we enter the trade, monitor the trade for an exit signal, and then usually, compile our data as well. Active Trader Live will automate much of this process for you. Now, I will go into more detail about the tools, courses, Active Live. That'll be on Saturday. So make sure you're registered for Saturday's webinar as well, because I will go into a lot of that stuff. And to do that, just go into the Stockscores website, which I'm going to just bring in here. So go to Stockscores, just go down the page. This is where you can register for any of the upcoming webinars. So this is tonight. Here's tomorrow, Saturday or Thursday, and here's the Saturday one, where I'll talk more specifically about the courses, the tools, what you get, what it costs. I'll touch a little bit about that tonight as well. All right. So, and of course you need capital. You have buying power. So if you put $10,000 into a brokerage account, for day trading, you get $30,000 of buying power. Obviously, lower price stocks need less capital. So if you're trading a 50-cent stock, you need much less capital than if you're trading a $50 stock, because they tend to be much more volatile. Our number one goal is capital preservation. As I said, to be a successful trader, you have to be good at losing. You have to be good at taking losses when the market tells you to. That's a big part of what I teach. Showing you where to take the loss, because you're not going to be right all the time. But if you just have some small losses and then you have bigger profits after 10 trades, you should be profitable if you're doing things as I tell you. As you get more successful, increase your risk. If you're not doing well, if you've suffered a few losses, then decrease your risk. And ask me for help, because most people, if they're consistently losing, they're probably doing something wrong. And so I need to help you with that. Now, things that will help you succeed: realizing that trading is simple but not easy. You need to walk before you run. I know everyone would like to make $50,000 a week trading the market, but it's not going to happen your first week. It takes a little bit of time to learn this stuff. And I am mentoring my students every single day. Every day I'm on Active Live. I give them my opening market comments. I call out trades. I give them the tools. I answer their questions at the end of the day. I review trades every day. So I give you just every single day, here was the buy point, here was the sell point, here was the buy point, here was the sell point. I do that on every trade that people ask about. And if you do that day in, day out, after a month, it's, you get it. But it's not going to make a lot of sense on the first day, and I don't want anyone to expect that. It's a skill. It takes time to learn. You don't learn how to play the piano in a day. It takes time, right? Trading doesn't take as long as learning how to play the piano, but it does still take repetition. I don't want you to be a gambler. Follow a strategy. If you are trading on tips or what you hear someone say on TV, it's probably not going to work very long. You might get lucky once in a while, but I really think you have to have a strategy that has been tested over a large number of trades. So how to become an active trader? Let's say you've decided, okay, that's what I want to do. I want to supplement my income by day trading 2 days a week, or I want to be a full-time trader, whatever. So the way I did it is I developed and tested my own strategies. That took me 8 years. And along the way, a lot of expensive lessons, because I didn't know what I was doing. So the alternative is I will teach you what I've learned over the last 30 years, and it's going to cost you far less than what it will cost you to do it yourself. And I'll break down the costs of learning and the benefits that I will give you for being a member of Stockscores on Saturday. I'll walk through the economics of it, but just as a quick hint, to build those indicators that I've built, that's close to $10,000 in programming costs. Not to mention the years and years of experience that went into knowing what to program. And then there's the software and the computers. The computers that I run are the most powerful machines that I can get from Dell, $5,000, $6,000 computers. I've got data feeds for those things that are hundreds of dollars a month. So all of those things go into something that you can really pay for in one trade. And that's the education, which we'll talk about in just a moment. So the way I teach is through something called the Stockscores Education Center. So this is an area of the Stockscores website where you can learn online. So you go into the Education Center, and here under Foundation is the theory, and then the strategies are taught here for investors and here for active traders. So all of those strategies we've talked about tonight are all explained here. There's a couple more, but I'm not really doing the wave right now, so I didn't want to talk about that one tonight, but they're all here, all right? The way the foundation works is there's a written lesson that you read, there's a video that you watch, there's an assignment that you do, and there's a test that you take. For the investor and active trader strategies, you just read the lesson and watch the video, but more than anything, you're doing it with me every day in Active Live. Because I apply these things in real time, call out the trades that I see in the opening half an hour, and then through the rest of the day when it's not so busy, you're expected to do that on your own. But then at the end of the day, I do a review with you, and you can ask me, did I do this right? Did I do this wrong? Whatever, and I'll give you feedback on it. And again, it's not that hard, but it takes some practice, like anything. And so I'm your coach. I'm going to take you through each day and show you what to do. Now, the investor course, which is what we'll talk more about tomorrow, is for those that want to be more investors managing their retirement portfolio, that sort of thing. We'll talk about that more tomorrow. Active trader is what, if you want to learn how to day and swing trade, that's what you would focus on, is the active trader course. You're going to learn all of the investor stuff as well, but my specific rules for the active trader strategies. You'll have access to all of the market scans on Stockscores. I'll show you those things on Saturday. Email support from me. And then on Active live support, when you ask me a question, I just answer it at the end of the day there. You get 6 months access to the tools, which you can renew at $300 a year. If you don't want to use the market scan tool, you don't have to, but it's a real good time saver. Plus, you get my real-time indicators for TradeStation. So that's the thing I said, have cost me at least $10,000 in programming to build. And I'm going to give you those for free with the Active Trader course. And it makes you eligible for our Active Live service, where you can, have me mentor you each day with real-time trade alerts and my commentary. So Active Live, you will watch me create and monitor the market for day trades and swing trades. It's real-time. It's a live webinar that runs every day. It's automated. The computer does most of the work. I will help you in the open where it's really busy, because it's just going to be overwhelming in the opening half an hour. And after that, it settles in and it's not that hard to assess the signals. But this service, Active Live, is only available to Stockscores Active Trader members. See, the problem is if I had, too many people in this thing, then we would move the market when we all bought the same stock. So I don't want to have a lot of people in Active Live. So the requirement to be a member of Active Live is to have done the Active Trader membership. Okay, so this is Active Live. I'll talk more about that on Saturday as well. Talked about it a little bit. So twice a year, I complement the online training with some live training. So I'm calling this the Stockscores Express. It's the fast version to get through the material. Now, you should still go through the material after the fact, but if you just want the quick overview of everything, this is the way to do it. It's live webinars starting Monday, October 23rd. On the 23rd and the 24th, for about an hour and a half each night, I'm going to teach you the theory. And then the following Wednesday and Thursday and Saturday morning, we're going to do market scans together. So this is more for the investor. For the active trader, you get a free month of active live that you can use whenever you want. So it goes by calendar month. So you might study in October and then do active live in November. But if you wanted to wait till January to do active live, it's totally up to you. You get a free month. All of these classes are recorded, not active live, but all of these classes are recorded. And so if you can't attend on a Thursday because you go to pickleball, then hey, just watch the video later. It's better to attend live because you can ask questions. Now the special offer is anyone who registers for the investor or active trader memberships by Thursday, October 19th, so basically a week from tonight, next Thursday, 11 p.m., will get the Stockscores Express classes free and the strategy application series free. So the Stockscores Express, Monday and Tuesday, the 23rd and 24th of October, the market scanning, Wednesday, Thursday, Saturday, and of course, if you are an active trader member, then you will also get active live. So right there, that's a nice bonus, but I've got one more bonus for you. The price is $29.95 for the investor course, $39.95 for the active trader course. The mentorship's actually not available. It'll probably be available next year, but I'm just not doing it this run around. And so I'm going to give you a $500 discount until October 19th. So if you want to do either of these courses, write down these discount codes. They're valid until October 19th. Save $500 on the investor course using this code, 500 ITA23. For the active trader course, 500 ATA23. And that'll give you $500 off of this price, or this price. By the way, if you do the active trader course, this is included. Okay, so this is in this. If you want a day in swing trade, this is the right course. If you want to just invest and manage your portfolio, this is the right course. I will go into more detail about the courses on Saturday. And of course, we'll talk more about the investor approach on tomorrow, on Thursday. Now, the next thing I'm going to do before we get into the two trades where I walk through the math of it and the economics of it, I'm just going to launch a poll, and I'll also answer some questions while this poll is up. So I don't like to bug people with, marketing and that sort of thing. Okay, so if you would like a follow-up email, I might send you 2 follow-up emails for either of the courses. Just say yes. If you don't want me to bug you, say no. And while that's up, I'm going to answer some questions that have come in. Do we get a chance to see which signals that you acted on? No, I don't share the stocks I actually buy, but you can assume I buy many of them. How much has the course changed from the one I have, Stockscores Pro, copyright 2008? Quite a bit. I mean, the basic knowledge is not a lot different, but the indicators are better. The strategies have been improved. So, I mean, yeah, there's been quite a bit of change since then. How important is it to actively monitor for exit signals? What do you think about trailing stops? Well, I'm not a big fan of trailing stops because they're a little bit arbitrary. I have a better method. Depends what kind of trading you're doing. If you are day trading, then you're going to want to be fairly actively monitoring those trades. If you don't have the time, then I would put you towards swing trading because it doesn't require your monitoring as closely. So, with my swing trades, I might buy them and check them every half an hour, 15 minutes. Just kind of depends on the day. Generally speaking, I just let them go. I put stops in. So I get stopped out, I get stopped out. But otherwise, I just let them go. I'm more concerned about the stocks that go up. If a trade goes up quite quickly, it might go up 6 or 7 RR. I want to lock in that profit. So I can see that from my phone. Out of 10 trades, 1 or 2 might be doing really well, and those are the 2 that I'm going to monitor for an exit. What else we got here? Someone asking about how do you get TradeStation in Canada? So I'm Canadian. We cannot have a brokerage account with TradeStation. However, we can subscribe to TradeStation. So if you go to Google and just ask Google TradeStation subscription, then you can get the page where you can subscribe to it. It's about $95 US a month to subscribe to TradeStation. How long are the courses? Well, you know, the 1 week of classes is going to give you the base knowledge. The material online is, you don't have to do it all, so you kind of pick where you're going to focus, but say, expect to give, like I used to teach it in a weekend. I used to teach these courses live in a university classroom, and it would take me a weekend. So if you can dedicate that kind of time, you're going to learn, and then it's just a matter of practicing. Do you have the indicators for Thinkorswim or wealth charts? No, only for TradeStation, sorry. How much of Active Live for those of us who have taken the investor program in the past? So if you've taken the active trader course in the past, if you're an active trader member, then it's $245 a month for Active Live. You have to be an active trader member. So if you took the investor course, you might have to upgrade to the active trader course, and you can upgrade. It's $1,250 to upgrade. And if you have questions about that, email me and I'll give you some guidance on that. What software do you use to remotely watch the stock movements? I use TeamViewer. There's another one called Go to My PC. And so from your phone, you can control your computer at home. It's really awesome. And actually, it's free. Like, to use the basic version is free. Seems like you need TradeStation to swing trade. Can't get info for half an hour. We don't have to have TradeStation. You can have Active Live and some real-time charting program like TradingView or TC2000, your broker's charts. You need a real-time chart, I would say, but it doesn't have to be TradeStation. What is the reason for using the 13-minute time interval as opposed to others? Well, I just like the symmetry of it. There's 30 13-minute bars in a day, and I just like that symmetry. But I don't know, it's probably a little bit of superstition for me too. I've used it forever. Like, I've been using that 13-minute interval for 20 years, and it's always worked well for me. All right. So again, if you've taken the investor course and you want to upgrade, I'll show you how to do it. You want to upgrade from the investor to active trader. Oh shoot, I don't have the window open anymore. Just go to Stockscores, log in to the website, go to trader training. No, go to Education Center, and you should see a link to upgrade. I'll show that on Saturday. I'll walk you through that process on Saturday. I closed the window down, so I can't bring it up, unfortunately. All right, so I promised we were going to look at some performance numbers here before I lose my voice. So let's talk a little bit about the risk-reward ratio first, and then I'll show you the performance of a couple of trades. So if we buy a stock at $10 and our stop loss is at $9, our risk is $1, okay? If we sell that stock at $13, our RR is 3. All right, so that's pretty simple. So when I go through these things, I'm going to show you the reward for risk of a couple of trades, and we'll talk about the capital required and that sort of thing. The way you make money in trading is having small losses and big profits. You shouldn't focus on your success rate. You can be successful being right 50% of the time. Now, I tend to be more like 60, 70%, but 50% of the time can work, provided you don't take big losses. That's really important. All right, so now let's look at, this is a trade from today, and this was a stock that I put on our watch list a few minutes after, actually, I think even before the market opened, I had it on the watch list. I had it on the watch list because it was trading abnormally. You can see that on the chart here. The volume is very abnormal. And then it's just a matter of waiting for the entry signal. So that came with an algorithm signal right here, was the first entry. Then there was another one right here. See the little yellow dot there? Actually, I think this is the entry signal. They're more or less the same price. All right, so let's use this later one. So our buy point is there, and our risk management is based on this, but our true stop is going to be down around here. Okay, so if this is our stop at 32 cents, and our entry is at, say, 37 cents, then our risk is 5 cents. Okay, so if we are willing to lose, well, let's do $500. So if we say our risk tolerance is $500 and our risk per share is 5 cents, then we're going to buy 10,000 shares. And 10,000 shares times 37 cents is $370, or sorry, $3,700. So that's our position size. Now, because this stock is under $2, you cannot leverage it. Stocks over $2, you can margin, but this case, you have to use all the money for it. Now, this stock did this real strong rip into the close, and it gave our sell signal right there at about 78 cents. Okay, so our profit per share, we bought at 37, and our exit is at 78. So our profit per share is 41 cents. 41 cents times 10,000 shares is $4,100. So for $500 of risk, the profit was $4,100. Now, if you wanted to make $1,000, which is what I said at the top of the presentation, then you would need to take about 1/4 of this in terms of risk. So about $125 of risk would make you about $1,000 on this trade. All right, and this is a trade that I had on my list right from the start today. The automated signals triggered. It was on that screen that I showed you earlier. Okay, so that's day trade. Let's now talk about a swing trade. So this is a swing trade that I found on October 3rd, right here. And the entry on this one is $1.85. That's a little bit hard to read. And our risk tolerance is down to $1.68. So our risk per share is 17 cents. So if we buy 1,000 shares, our risk is $170. Now the exit came right here, and we have an exit method that I teach called trail by one RR method, or trail by 2 until 5. I use both. So in this case, that's where the exit was. And that was at about 6.5 times risk. So in order to make $2,000 on this trade, you'd have to have made 6.5 times 300 would be 1950, right? So that would be your risk tolerance. So to risk, if you risk $300, basically meaning that if you get stopped out, you lose 300 plus the slippage. It's actually going to be more like 450. So how much money would you have to put into the trade? Basically, you'd have to buy 2,000 shares. It's a little under, I'm just trying to keep it simple. So you buy 2,000 shares at $1.85. It's costing you $3,700. Again, you can't margin it because it was too low priced of a stock. You sell it up here and you make $2,000 profit in 1, 2, 3, 4, 5, 6 days. All right, now the thing that separates you from doing this is A, the knowledge, B, the indicators, and C, the confidence. So if you're an Active Trader member, I'll give you the indicators, or you'll have access to Active Live. I'll give you the knowledge on why you would buy here and not here, because they're both pink dots, but only this one matters. And then because I'm going to coach you every day in Active Live, I'm going to work on building your confidence so you can do this for yourself. And that is, that's it. A couple trades from the past week. and they're in my spreadsheets. I'm tracking the data on those, and they were all found in active live in real time. I called them out, and many of my subscribers would have taken advantage of those. Okay, next question. Are we getting access to the Stockscores alerts? Should we become an active trader member? No, Stockscores alerts is separate. Active trader member gives you access to active live. Question, which investor strategy is working well at this time? I'll talk about that tomorrow in the investor session. We'll go through that. Generally, I would say that day and swing trading is much better right now than position trading, because the daily time frame on the market is down, and so it's not great to position trade right now outside of maybe the energy sector. So, but I'll talk more about that tomorrow. All right. So again, you get a $500 discount. You get bonus training starting October 23rd. You've got the discount codes to subscribe. You go to stockscores.com/learn, and you can register there. But again, I'll do another webinar tomorrow that'll talk about the investing approach. And then on Saturday, I'm going to show you how the tools on Stockscores works. I'm going to show you how TradeStation works. I'm going to show you the indicators. And I'll answer lots of questions about the courses and that kind of thing. So you've got lots of time to decide, but the sooner you've registered for whichever course you like, the sooner you can start learning it and be ready to participate in those live classes that we're doing starting October 23rd. Now, a couple more questions before we wrap up. What if you don't have TradeStation? How can I use, say, TC2000 wealth charts? Well, you can't use my indicators in TC2000 or wealth charts. You can only use them in TradeStation, but you don't have to use them because Active Live is doing it for you. So I have lots of students who just watch Active Live for the signals, and then they use whatever charting program that they like to do their analysis, because you don't need TradeStation to do the analysis. I do think that you will be better off using TradeStation because it allows you to plot my indicators, but you don't have to. Another question, are you able to make these trades within a registered account? Well, you can't have a high turnover in your registered accounts. If you start making too much money, they'll make you pay the tax on it. So you got to be a little bit wary of that. Swing trading, you can probably do a little bit, but day trading in a RRSP or a TFSA, you're pushing the rules a little bit on that. So I have students who do it, but just know that if you make too much in it, they're going to make you pay the tax on it, because of course there's a tax shield there. All right, I don't see any more questions, so I think I'll wrap it up. Again, make sure everyone registers for tomorrow if you want to learn about investing. And if you have some interest in the courses and the tools, I'm going to walk you through all that, so register for Saturday for that. You can see my contact information on the screen, and so if you have any questions, feel free to email me. But otherwise, I want to thank you all for joining me. I hope that you've enjoyed it, and as always, trade well.